Well, global stocks are sliding while gold is gliding higher as Trump has set a typical risk-off tone after threatening the EU with a 50% blanket tariff from July 9, while we're seeing Donald Trump also get a little bit personal, threatening a 25% levy on Apple's iPhones not made in the US. My name's Jessica Amir, a market strategist here with Mimu. It's great to have your company on this 26th day of May. So the Nasdaq 100 continued its slide on the back of remarks from Donald Trump, which occurred in our weekend and ahead of the Friday close. Now, despite the EU and Japan looking to negotiate, many are fearing that turmoil could return to markets and perhaps trigger a broader sell-off. So this is what's rumbling in markets right now. Meanwhile, we are seeing swift moves from Trump basically biting into Apple, saying that he's going to, or the US is going to slap tariffs on iPhones. Look, this is not just a big deal for Apple because, of course, Apple, let's remember, it's the world's biggest or third biggest company in the world. It's got a $2.9 trillion US valuation, and it's now staring down the barrel of profits being squeezed. And this is probably going to be a deterrent for, obviously, future iPhone buyers because they'll be paying 25% more, right? But look, just think about the spillover. I just want you to question how this could potentially hurt millions of global investors who are holding Apple shares either directly or indirectly via superannuation or pension funds. And the reason I'm saying this is because Apple accounts for 6% of the S&P 500. Apple also accounts for 8% of Nasdaq 100 ETF. So that's what I want you to pause on and consider. Consider that there could be more darkness ahead for Apple because the market is probably going to need some time to unpack this. Let's think about Nvidia. Nvidia is the big focus this week. Obviously, the world's second biggest company. It's valued at $3.2 trillion US dollars. And look, it is expected to deliver another record quarterly profit. We're looking at $43 billion this quarter. That's what Nvidia have said that they're going to report themselves. That's their own guidance. And you can have a look at more detail on Mumu's platform. But let's just annualize this out. So if they do what they said that they're going to do and deliver $43 billion in the quarter, let's annualize that out. That works out to be $147.8 billion US dollars. That's huge. That's more than the combined revenue of Australia's big four banks, more than that. Now, what we need to remember is in earnings season, an earnings beat, an upgrade to a company's outlook, usually sees their shares pop higher. So we're looking basically for affirmation that Apple is growing its earnings, they can continue to grow their earnings, and we're looking for the rumors to be true that they are going to launch that cheaper pinup Blackwell AI chip. Now, if this happens and the market likes their results, right now the options market is suggesting that Nvidia shares could jump up 6.8% if everything is rosy. But look, if there is a disappointment, Nvidia shares could fall by this tune. That's what the options market is suggesting. So basically I'm saying a beat may see their shares jump 7%, a miss could see them fall 7%. This could fall if we see this disappointment. The fall in Nvidia would also spill over to tech that's already in shaky ground, not yet recovered from the pullback. Also consider Nvidia makes up 8.2%. It's a pretty big deal, 8.2% of the Nasdaq 100, and Nvidia also makes up 7% of the S&P 500. That's the world's biggest index in the world. And also do remember that the last time Nvidia reported results, it wasn't good enough. So Nvidia did what they said. They were, they punched above, they delivered over and above what they previously guided for. They reported $39.3 billion in quarterly revenue. They beat expectations, they upgraded their outlook, but it still wasn't good enough. All I'm saying is just be prepared for wobbles in Nvidia shares, because the last time they delivered their results, their shares dived almost 9% the day after they reported. So shareholders may want to strap in for a wild ride. What is not looking so wild, though, is gold. Gold is remaining in focus this week, and hallelujah, the gold price has pushed up about 2% in early trade. It's up 1.9% to 3,357 US an ounce. Look, some are betting that they could we could potentially see gold push back to the records that we previously saw. This is because a trade war tension is starting to, I guess, pick up again. And plus we saw some strikes against, tension is picking up between Ukraine and Russia once more. Basically, also keep in mind that the US dollar is continuing to weaken, and that also supports a higher price for gold. What we've got on the screen here is West African Resources, which is starting to build momentum again. West African Resources was the best performing ASX stock in the ASX 200 last week in the gold space. Following, we did have Genesis Minerals as well as Ramelius Resources. They all rose between 12 and 17%. So doing really well last week, just making double digits in 5 trading days. Also keep in mind that Chinese shoppers are now, I guess, buying more gold than they are discretionary items. So that's right, Chinese shoppers are now buying more gold jewellery than they're preferring to buy Louis Vuittons. I think this is really worthwhile pointing out that China jewellery retail sales in the month of April actually jumped 25%, whereas consumer good purchases in China only jumped 4%. I thought that was quite interesting to point out. And just my final thought for the day is do keep an eye on defence-related investments and ETFs, such as ITA, that's the world's biggest defence ETF. Also keep an eye on local defence stocks on the ASX, such as Drone Shield. And this is because we have seen Russia strike down on Ukraine with the largest drone and missile attack in the war so far, killing about 12 people. And that's the daily for stocks and ETFs that we've mentioned today. Head over to Memo's platform. And also don't forget that we have a podcast if video is not for you. Stay safe, happy trading. See you tomorrow.